how long did it take you to really be more consistent with your trades, and what helped most? To be more consistent with my trades, man, that probably took, to become consistent. So for me, what becoming consistent means for me is consistently profitable, right? So I assume that's your question, just a guy. And the answer to that would be roughly 2.5 to 3 years. It took me the better part of 3 years. It really wasn't until early 2016 to mid 2016. So I got started trading mid 2013, mid to late 2013. I wasn't really consistently profitable until mid 2016. And what helped the most with that, I think, man, a lot of things go into that. I mean, it was really just, it was so humbling for me. That first 3 years was such a humility gut check for me, because I essentially dedicated most of my time, most of my free time while I was in college. So I wasn't one of those, like, when you think of college, you kind of associate that with, like, you know, partying and doing all that fun stuff. It's not like I didn't have friends or like go to a party here and there, but like for the most part, I was hunkered down on my laptop. Actually, during college, I literally had one laptop screen. I didn't have like any fancy monitor setup or anything like that. I literally had one laptop screen. And then when I was in school, I had the computer lab, and I would have a computer screen, which is always nice. But I quite literally spent the majority of my free time studying, and really without much success. So the better part of like 3 years, I was really just kind of learning. I was kind of developing the habits and kind of mentally, psychologically conditioning myself. And what was so brutal for me during that process was that there were so many times that I was like this close to like a nice, you know, $5,000 trade, or maybe like a $10,000 trade. But I got so badly wrecked early on in my career that I became very, 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 very quick to take profits. So like whenever I was green, I would just like sell, and I would just like run for the hills with my green trade. So it took me quite a while to kind of build the confidence up to hold on to a winner. So yeah, I think that's part of the reason why it took so long. And to answer your question of what helped me the most, it was really just getting to that kind of inflection point in my life where I was able to have the confidence to hold on to winners, to trust myself. Because again, I always believed in myself, and I always knew it. I always knew what was possible from trading. It was just like, I just, for some reason, again, we talk about ceilings, talk about barriers. I had this like mental blockade that took me like the better part of 3 years to just kind of get through it. And then once I got through it, I never looked back. So yeah, I mean, what helped me the most was just finally getting to that inflection point of self-confidence and having enough trial and error under my belt, having that system so well established that I was now comfortable enough to, you know, make it happen finally, consistently. Appreciate it, Drew. Drew said, for a new trader, what is the best to focus on when learning? Chart analysis, etc. For a new trader, what is best when learning? I mean, obviously, technical analysis is extremely important. I'll never, you know, I'm a chart guy myself. I'm a technical trader. I pay attention to fundamentals. I know fundamentals, but fundamentals are not what I'm formulating my theses on in my trades, right? I don't make these 15, 20-minute videos at night talking about, you know, 10K reports or annual reports or, you know, sector, you know, stuff like I'm not breaking down news and things like that. I'm looking at chart data, I'm interpreting that chart data, and I'm drawing my conclusions. 95, 99% of the theses that I conclude are based on chart data. So obviously that's important. However, and something that I've said in the past many times, and something that I'll always say, is that recognizing chart patterns and studying chart data, that angle, that part of trading is the easy part of trading. And I do the little air quotes because obviously it's not easy, but relative to what the difficult part in trading is, it is easy. What the difficult part of trading is, and what I would recommend for a new trader, is to focus on the psychology, because the psychology of trading is what is difficult. If you can lay the groundwork early on and kind of rewire your brain to think like a trader, right? We're hardwired as human beings, and human beings we have these innate qualities that make us bad traders. Believe it or not, we're not innately programmed to be good traders. That's not how like human beings got to this point. We're innately greedy. It's like all the bad characteristics of trading is what human beings are innately programmed to be. So you have to kind of like rewire your brain to think like a trader, to cut out emotions and things like that. So I would say psychology is the most important thing to focus on for any new trader. Jonas, my man, what's going on, bro? Long time no talk. How much do options premiums matter to you? If the setup is there, does it deter you from going heavier? Jonas, the beauty of how I trade options is that premiums are essentially irrelevant. And I understand that a lot of the times when so I say that, and it's because of the fact that I'm trading intrinsic value. 9 times out of 10 that I'm scaling into my options position, it's an intrinsic value position. So the reason I say the premiums are irrelevant is that if it's intrinsic value, I don't care if I'm paying $1,000 for one contract. I don't care if I'm paying $3,000 for one contract. It doesn't make a difference. Obviously, depending on your account size, it's going to be a little more difficult to play intrinsic value, and I understand that, and that's why my strategy doesn't necessarily work for everybody. I understand that, but I think at least 70 or maybe 80% of the time, the setups that I'm watching, the intrinsic value contracts are typically pretty affordable for most account sizes. So like a good example, last week, BABA, I was buying the 140 contracts. I was paying about $15, $16 per contract. So that's about $1,500, $1,600 per one contract. And that might sound expensive on the surface, but like you have things like Amazon, where Amazon, an intrinsic position for Amazon on like Monday or Tuesday at the start of the week is probably going to cost, around $4,000 or $5,000 for one contract, maybe even more, depending on if the implied volatility is higher or lower. Depends on the market conditions. But essentially, options premiums don't matter to me because of the nature of how I trade options. And there are circumstances where I am trading at the money. Sometimes I'll go out of the money. If I can really, really, really anticipate a range that we're breaking out into, then I might do out of money, kind of trade into that anticipated range. But premiums don't really matter to me. What time interval tick chart do you study most to draw up your thesis/strategy? I use weekly, I use daily, I use the hourly, and then I use like a 15-minute time frame. And when all those time frames are kind of lined up, kind of synchronized, and they all reflect kind of the same, they all kind of point to a more big picture painting, if you will. That's kind of when that's when I can build higher conviction into something. But I'm using, if I'm making an intraday scalp, I'm using like a 5-minute time frame. But if I'm generating a thesis on like a swing trade, I'm using every imaginable time frame down to like as low as like a 15-minute time frame. But there's a lot more emphasis on like a weekly and a daily time frame with something like a big picture swing trade chart, like SHIP, for example. SHIP, I'm not generating my trade thesis based on a 5-minute time interval. That's ridiculous. I'm basing my trade thesis. So let me share screen. So this is the daily chart. This is SHIP. I'm not basing my trade thesis on, you know, a 5-minute interval. I'm basing my thesis really primarily on like on the weekly time frame. It's a beautiful weekly time frame. You know, we've entered a multi-month period of consolidation after this huge move back here at the start of the year. And now, you know, there's the key inflection level that I've been paying attention to right up here around $1.40. And that for me, especially if volume supports it, that's kind of the big breakout spot. But I'm not, you know, I'm not looking at like a 15-minute time frame or anything like that. That would be silly on an example like that. So a little bit about myself, Boris. I've been trading since 2013. I've been trading full time since 2016. I started I mean, so mine and Josh's goal was always to start something where we can teach and build a community and build a culture. I've always believed in my methods and the things I've learned, and I've always wanted to, I guess, in a way, give back. I've always wanted to be a teacher. I've always wanted to have people that, you know, I teach things and I kind of watch them grow and blossom into a product, I guess. It's cool. It's really cool to like teach someone something and then to see them kind of take off and turn it into something. It's fulfilling. So for me, that's a big reason why Trade with Trader started. It was a reason, and I just love doing it. Like I could sit here for another 2 hours and talk to you guys. It doesn't even matter if it was 5 of you in here. The fact that we had as many as 85 people tonight was incredible. It's just cool. It's just awesome that like people value my insight and my input, and I can, even if I help change one person's life, to me that's fulfilling enough to keep doing what I do because I love it. And yeah, I mean that's for me the big part of it.